Welcome to this week's edition of the Mortgage Blog with monstermortgage.ca. I'm Vince Gaetano. In the media this past week or two, we've seen considerable discussion and articles on collateral mortgage security that's being used by the big banks. Traditionally, these products have been designed for sophisticated borrowers that use them for investment purposes and whatnot, but the banks nowadays have been making them mainstream and encouraging a lot of Canadian consumers to take out these collateral mortgages, which are hidden as lines of credits on their home. Now, the banks are very good at promoting them by showcasing some of the features that they have. You know, there won't be any more legal costs, there's tremendous flexibility, and they also allow you to register higher mortgage amounts than what you're actually borrowing for future use. All sounds good and dandy, but the reality is these products have some pitfalls, and pitfalls Canadians should be aware of. Number one, when you are dealing with these type of products, they're closed products in the sense that you don't have a traditional mortgage. The collateral aspect of the product limits you from transferring your mortgage at the end of the term, because traditional mortgage, the standard mortgage charge, they have terms and conditions and an end date, whereas the collateral mortgage is a revolving facility that does not have an end date. What does this mean? That means you're going to have to pay legal fees to get out of it. You lose your free agency status after your mortgage term ends, because that mortgage is not assignable to a new lender. It's going to cost you thousands of dollars to pay legal fees to get out of it, and restricts you from a negotiating perspective because of that extra cost that's incurred with these type of products. The other issue that I feel is quite negative is the fact that the product itself allows you to increase the limit registered. So if you're borrowing $100,000, the banks can register $150,000 against your house. And they do that because they want to promote the fact that, hey, you don't need to refinance or spend any more legal fees, because we'll register a higher amount, so if you need the funds down the road, you can access them quite simply. The reality is, when you do that, you actually eat up the equity in your home, and if you ever need secondary financing or you need to access the equity in your home for other types of products elsewhere, you can't do so, because that registered charge is for the higher amount and eats away at your equity, which is really concerning. The third point that I want to make is, with collateral mortgages, if you miss a payment, the bank has a right to change the terms and conditions of your of the product itself, whether it's a line of credit, whether it's a mortgage product designed to fit into that collateral charge. They can say, listen, we've had some late payments on your account, we're going to need to increase the rate. A traditional mortgage, you're unable to do that because the terms and conditions are set out in the mortgage instrument itself. And with a collateral mortgage, there's always an ability by the bank to increase and change the terms on you at any time. Now, these products do have a place in the marketplace. They are quite flexible for that investor, for that person who's paid off their home and wants to access equity in their property for other investments, whether it's rental properties, investment portfolios, and the like. But I don't believe it's the right product for the regular homeowner who wants to just pay off their mortgage fast. These products encourage you to borrow. They encourage you to always be in debt, and they're contra the savings philosophy that we have to strive for as Canadians. And I always want to make sure that people are aware of the pros and cons of these products, and it's important you speak to a mortgage professional to make sure this is the right product for you. Thanks again for watching this edition of the monstermortgage.ca mortgage blog. I'm Vince Gaetano. Until next time.